In the beginning, sure, yes.
Okay, so I think we'll get started. Hi, everybody. Thank you so much for joining. My name is Benjamin Dada. I'm from the Condia team, and I'll be your host today. I'm so excited to have all of you, joining today. Before I introduce my guest, and I also let him, say one or two things about himself, I just wanted to set the tone. So today would be, me asking Andrew a few questions, and then we would open up the chat section for all your questions to come in, and then we would have someone review the questions, and then we would ask Andrew if you have contributions as well, and you want to speak, we will do that in an orderly manner, right? But generally, every year, we always hear people talk about, African startups raise billions of dollars in funding, and it has almost made us feel like venture capital funding is like the only way to build a business. And I'll give you a classic example. So in Nigeria, there are like 40 million SMEs. Of those SMEs, only about 3,000 can be labeled as startups. And of those startups, right, about 10% are VC backed. So in reality, we probably should be talking more about bootstrapped and self-funded and all of those kind of businesses over venture capital. But we'll see how we get on today in this conversation. And I wanted to really speak to a founder that has gone through that decision-making process of, okay, now I'm in 2024, 2025, I'm about to start a business. Do I go the route of bootstrapping? Do I go the route of venture capital funding? And just to really get some real-life trade-offs, he has had to make. So, when that topic of bootstrapping versus venture capital came to mind and came to our team, there was no other person that could easily come to my mind than Andrew. I've known Andrew for, I think, 4 or 5 years now. And, I know of Deimos Cloud. And now he's told me about his new thing that is venture backed. And I'm just going to let him have the floor. Andrew, you can introduce yourself. Tell us, who you are. Tell us what Deimos is. And then we'll take you from there.
Okay. Thanks, Ben. Thanks very much for having me. I appreciate the conversation that you're bringing to light. And yeah, I didn't know that. So you said 10% of startups are venture-backed and the rest are bootstrapped. I had no idea. But obviously that makes sense. And it just doesn't make for, imagine the headline, company does work, sends an invoice, gets paid, spends less than they earn. I don't think it'll make very good news, as opposed to company, raises a whole bunch of money, burns it over 3 years. And so sure, I'm Andrew. I am the CEO at a company called Deimos, and Deimos is a bootstrap company. And I'm also the CEO founder of a new company called Salus, and they're both in the dev and SecOps space. The one is a services business and the other is a pure software business. And I would say that I'll just give you a quick intro. Deimos does implementation. It's a channel partner. So I was just in San Francisco and I was in New York the other day, opening up Deimos USA to join the channel. So we're a channel partner to Google, to AWS, to Azure. Those are the 3 major partnerships that we maintain. So it's a great business. We get included in the channel, and we do work for big brands. We do a good job. We get paid for our work, and we're slightly incentivized by the public clouds. But together, that's 100 people at the moment, purely bootstrapped. It's an expensive operation, you can imagine, lots of salaries. I think we spend more than probably $5 million a year in salaries or something like that. And yeah, it's a wonderful business, and I have a lot to say about it. The other business I started is a small team and very different culture, and I haven't closed the seed round yet, Ben, but I have raised millions of dollars for it. There's no announcement yet. It's just in the final stages of closing the seed round. And but yeah, very happy to be funded and wrapping up, and I'm sure there'll be a small announcement. It's not a huge seed round, but it's fairly chunky and good enough to keep going, to get to the next stage at least. But it's also a platform. It's a developer and security operations platform. I'm sure I'll get a lot to speak about it. An AI native DevSecOps platform that we're releasing. I look forward to talking about it.
Yep, that's fine. So tell me, why did you start Deimos? What were you doing before Deimos?
So I'm assuming there's some engineering people on the call. I'll tell you something that I feel is an insight that that I've had over these long years, is that I've walked a very nice path, not on purpose, but I admit right now I feel very blessed and a little bit lucky. Actually, I didn't really plan it, but to go from an engineering career where I was the CTO of a startup, a big startup in Nigeria, but it's not the only startup I worked for. The first insight is that it really set me up very well for services, for professional services. So when I was the CTO of a company, man, I had a lot of pressure from the CEO, I had a lot of pressure sitting on the executive, a lot of people, are quite demanding and have high expectations of technology. So, everybody wants to build an app or go to market quickly, but to do things properly requires a lot of time, actually. It requires patience. Best practices require niche skill sets. So it's typically a very hard thing. You can't just rush and go to market. Eventually, you're going to fall over. But people have high expectations. That's the marketing department, customer service. I can imagine being a CTO in a big company right now. Must be mad. How are we going to use AI in customer service? And everybody wants AI in the whole. It must be crazy at the moment if you think about it. How are we using AI at the organization? But there's a lot of demand from sales, from marketing, from the exco, from you name it in a large organization, and that gave me, I would say, the ability to context switch very quickly, and at large volumes. And so what that did was allow me to consult multiple companies at the same time, and I was able to build a practice around that. And the insight is that being a head of department in a high growth company sets you up to serve many people at the same time, and that's something that I didn't think about, but it did serve me very well. Did you ask me why did I start Deimos?
Yes, so that was the follow-up to what were you doing before. So you were a CTO at a startup.
Yes.
So why did you decide to go build a service-based business versus like a venture-backed business, since you're already in that startup venture space?
So I won't give you all the details. I see there's a few people on the call, a lot of Nigerians. So let's say, I won't tell you all the details, but imagine conga.com. So that's where I was the CTO, and I think I don't want to talk too openly, but yeah, I'm sure it's fine. So some investors had come back so Conga raised $110 million plus, right? And as a group, we burnt that in 6 years. I don't know if you know that, and then it got sold as a liability because it was losing money after 6 years, and the next owner purchased it for a nominal fee, like $1, and took on the liability, and it's grown it into something else today. But I remember a moment when the investors came back, or it doesn't have to be the investors. Let's just say some aspect of the leadership came back from San Francisco, and they'd seen Amazon Fresh or Amazon Go, and they thought, why don't we build like this grocery experience for Nigeria? And the first thing I did was ask a bunch of questions around, what does the market research look like? And I'm not going to speak with exact words. I'm going to embellish a little bit, all right? Because the story is not actually about that. It's about the mindset of growth at all costs, and venture in general. And let's just say the decision was made to build online groceries in Nigeria. And from my perspective, you can buy a yam outside. It's very easy to get food in Nigeria, and there's no, the food that you buy on the side of the street is not sitting in fridges. A lot of it is not refrigerated. And when the board or the leadership of the company said, let's do X, my response was, hey, we're dealing with a lot of technical debt. It's going to take a substantial amount of effort to do this. Are we sure this is the right thing to do? And let's just embellish and say, they said, just do it anyway. And it cost millions of dollars to achieve. So you can imagine how to modify a really large system, a distributed set of systems with many, many moving parts to include and collaborate with all these departments around activation and software and changes to the warehouse and changes to the logistic chain and changes to the payment system and the marketplace system. And ultimately, that project took a very long time, involved a lot of people, and it fell flat on its face. And most people would have been able to tell you that by just thinking about it and maybe having a slightly different approach to decision making, right? And so I bring that story up because it showed me, and I'm also to blame, Ben. I didn't say no enough. I was an executive on the team, and I can't just say it wasn't my responsibility, but I was there and I was a part of it, and I executed on that project. And it just made me think, maybe it made me think about control, right? Because if I wanted to say no, I better have some control over it. And I didn't have any control over it. And to be honest with you, not a lot of people did, because at this point it had gone through Series B, Series C, maybe even a Series D. I didn't even know where it ended up, but I think I joined at the Series B. And it just made me think. I remember I interviewed at a number of places. I think I got a VP engineering position at HelloFresh. I had an offer at Klarna. That's right. I had an offer for VP engineering at Klarna in Sweden. And I thought, nah, I'm not going to leave. And my wife encouraged me to say, why don't you try and start something on your own? And I actually took on Conga.com as my first customer. I took the last remaining engineers. We formed a little team. And I think I brought that story up just because it made me a little bit allergic, and nonsensically so, because over time I've come to appreciate the good things about venture building, and there's really a lot to say about both camps.
Yeah, I think you've touched on a very important point, that distinguishes bootstrapping from venture capital, which is like that control and ownership versus something else, right? But that's interesting to me. So there's a trend, right? It looks like most people who are building in the service industry are the ones better suited for bootstrapping versus someone building software, right? So if you're trying to build software as a service, it's like there are not that many examples of people who have bootstrapped their way to software as a service success because of that whole marketing funnel thing. How do you get customers? The cost of one subscription is like $2. Meanwhile, in the services industry, you can have a customer that pays your entire project initiation or project development cost in one build. And and Team Apt, formerly Team Apt, now MoneyPoint, that was also like their kind of story. Have you seen any instances where people who are not building service-based businesses have been able to bootstrap their company?
So I think, I didn't prepare anything for this call, but like say 10 minutes before it, I just started writing some notes. And what's come out of this little spider diagram is just thinking about these differences. Is the funny thing is, I don't think we have to differentiate between services being bootstrapped and products being venture-backed. I think there's a lot to share going through both experiences now that I think there's a lot bootstrappers can benefit from. That's the positive things out of venture building or venture capital. If we had applied that to bootstrapping, it would really help. And I'll talk about that if you're interested, and vice versa. And that's the misconception, right? So people think venture capital is about raising a lot of money and then burning it. And the answer is that's the opposite. Both bootstrapping and venture lead to the same thing, which is financial prudence, risk mitigation, risk management. It's all the same thing. It leads to the same thing. So if you think about where does a venture-backed company end? Take Facebook. Do you think Meta is raising money today? No, it's not, right? So the end state is profitability and free cash flow for the same. It's the same thing on bootstrapping. It's the same thing on venture. By the time you raise your Series E, you better have generated some free cash flow, because there's no Series Z. And if you think about, take for example the public company, which is Jumia, right? So if you go and look at Jumia today, Jumia was a venture-backed business. It reaches significant scale. It IPOs on the public markets on the New York Stock Exchange, and it's still running at a loss. And in fact, they needed capital. So what did they do? Like any public company would do, they have a board meeting. They say, guys, we're going to issue new shares. We're going to sell it to the public, and we're going to raise capital that way. And they did. And you can look at their share price. Everybody dilutes 20%. The share value drops. But they issued 100 million shares, and they got $100 million. And why are they doing that? So they've reached an IPO. There's no more Series A, Series B, but they are on the public stock exchange issuing new shares because they need capital. They're raising capital in that way. And it only really stops when you reach profitability. So bootstrappers and venture capitalists, it's the same thing. And that's the note. I've got this big we're all trying to achieve the same thing. Meta today generates free cash flow. They don't raise capital anymore. They did a Series D or a Series E, and there you go. It's a big one. It's $300 million, and you're on your own now. You need to reach profitability and generate free cash flow. So I've lost the question, but yeah, I've had an interesting time thinking about it.
So do you think so? I mean, like, instead of trying to, I just feel like some people have it easier.
Oh, sure. Yeah. So we were talking about services versus products. And the answer is absolutely. There are a lot of people building software with the bootstrapping mindset, because it's like a practice. What is the difference, actually? What's the difference between bootstrapping and venture building? I feel that it's a misconception. When you raise a lot of money, so even me, I'm going through this experience right now. I've raised multiple millions of dollars, and we're looking at our burn, right? And the people that I'm involving and including in the project, they're looking at the budget going, wow, it's a big deal. We're going to be losing money. And of course, right, there's a burn rate, and you're trying to make sure you've got enough runway. But the people that are building this company have come from the service business, and I'm just looking at them. I'm saying, are you only realizing this now? Where do you think the money came from to produce? So the story is, I used more than $2 million from bootstrapping and the free cash flow from Deimos to precede my. I preceded. So today I still own the whole. I have 100% ownership at the seed level. So I've raised money on safes, which is for future equity. So when we get to a Series A, when there's a priced round, the investors will get allocated the equity for the money they've put in at the seed. So right now I own 100% of the business. And the way that's happened is because I paid for the pre-seed myself from the free cash flow from my service generating business. And that's my story. And that's why I think I'm in a very lucky position, because I've had this experience of serving not multiple departments only, but multiple companies across the continent and globally. And then I've built this service business that generates free cash flow, and I have to practice extreme financial prudence, right, to do that. And I'm going to have to do the same. It's the same thing. So now I've raised capital. There's a bunch of stuff we should talk about. But yeah, there was a reason why I brought that up now.
Yes, I think that I've seen some companies try to do this switch or transition from, oh, I have a service-based business and I'm going to productize it and then try and raise money for the product business, right? And some of them haven't made it through. What do you think has helped? I mean, yes, you said, okay, you've preceded this with like free cash from the service-based business, and then you've been able to raise money on convertibles like safes. But do you think there's any other thing that has helped you, I mean, you're still in that process, but that has helped you transition, or that is going to help you transition successfully from that bootstrap mindset to like a venture-backed business mindset?
Yes. Yeah. Just before we go to that, your question is, are there companies that are bootstrapping products? And maybe not companies, but a lot of the whole indie hacking movement. I would say the more famous ones would be Peter Levels is one. A guy called John Rush is another. Okay. They're very vocal. They're very vocal about bootstrapping, and they don't have a service. It's only product.
Interesting.
And another would be, and this one's a little bit unfair, but if you look at where are these guys? 37 Signals, they built Basecamp. Very vocal about bootstrapping, and not to do them a disservice, but I think Jeff Bezos gave them $5 million early on for some equity in 37. It's the only investor in 37 Signals, which owns Basecamp and which owns Haymail and some other products. But they would say they bootstrapped, and they don't have any more, but they did raise a little bit of capital. But there's definitely the what I learned in this bootstrapping business that's going to do well is, in my opinion, is the financial prudence that I had to learn. While I think a lot of people that raise a lot of money and then run out of it they lack the experience in certain things, which would be generally forecasting your performance of a profit and loss sheet. So I'm a technologist. I've had baptism by fire of financial ops. Like, I didn't study finance. I studied theoretical physics. I studied computer science. I'm a scientist, mathematician, and engineering manager, right? That's my background. And when I started my own company, I had baptism by fire in terms of understanding the difference between a sale, a profit, and actually collecting from a debtor's book and managing creditors. And ultimately, for me, the most powerful thing is that understanding that nobody's coming to save you, right? Nobody's coming to save you. You can't ask for money from anybody. You're on your own. And so you better make money, and you better manage that money well. You better collect from debtors. I run a very clean debtors book. And so, for example, cash flow is generally a thing that will destroy a bootstrap or venture-backed business. Just because you have a lot of money in the bank, it doesn't mean you mustn't be collecting from your debtors. So I would say the most simple things, being able to forecast what your profit and loss is going to look like. Look, it's not an exact science, you're guessing. So I like to forecast 3 months in advance, right? So even right now, I can show you, I'm forecasting sales, forecasting salaries, forecasting expenses, forecasting like all the ops, everything for 3 months in advance, so that I know if the crap is going to hit the fan, I've got 90 days to do something about it. And I would say that kind of financial mentality, knowing, and that's the thing, you really should be running a venture business with financial prudence in mind, but there's a balance, right? Because the reason why people are giving you money is because they want to see growth quickly.
Yeah.
So you can't trickle feed something. But
that's my next question. And if people
Yeah.
in the crowd have questions, please feel free to drop them in the chat, and I'll pick from there as I go ahead. So my next question is like, one of the, would I say, challenges or downsides of venture capital is that pressure to deliver high return, right? And I think one venture firm, I think Flourish, they put together a report on founders' mental well-being, and they say a lot of founders are struggling with their mental health. And I was speaking to another investor, and he's like, you think you're doing well now, right? So for instance, let's say Deimos, the FT report, everybody saw it, 15 million. But if you were doing a venture, if Deimos was venture backed, you probably have done maybe, I don't know, 150 million. Like, do you know what I mean? Like there will be that pressure for higher return. So like, how are you personally thinking about balancing the pressure for higher returns with every other thing you need to balance?
So I think one has to really realize that not everything is venture backable. And yeah, I think at the early stages, it's very different, right? And people, look, I think if an investor takes a bet on you, it's your responsibility to provide your best, right? In the early stages, right? If it's pre-revenue, pre-traction, so we're talking about a good idea in a big TAM, right? Well, the investor knows, you're not guaranteeing the investor a return, but you are saying, I'm convicted and I'm going to do my best. And if you fail, that's okay, right? So this pressure that people are feeling need to be realistic. The expectations and the outcomes need to be discussed with your investors. They need to know, only a fool would give someone money in the early stages and say, hey, I want my 3x at this date. In the early stages, it doesn't make sense. So let's separate separate pre-seed and even seed, from that A, B, and up, right? Because by the time you're putting in money at a Series B, you're looking at the growth metrics. You're looking at net revenue retention. You're looking at metrics that you can make calculated guesses on. And that's why pre-seeds and seeds are not really based on revenue. Evaluations are not based on revenue. And it's all up in the sky, right? And so that's why I'm saying that stage, early stage, is very different from the later stage. And I think the ones that take on money at later stage and something goes wrong or whatever. I've never been in that experience, in that situation, so I don't want to speak on behalf of people that are feeling that kind of pressure. But I can imagine it must be severe, right? Somebody gives you a lot of money into a working business that all of a sudden goes wrong, and now you've got to pivot or do something different. I can imagine the pressure there must be enormous. But for early stage, I think a lot of people need to realize that it is a bet, it is a gamble early on, and it's okay if people fail as long as you are transparent, right? You can't fail because you spent the money, right? Which just happens a lot in early stage investing. You have to be transparent, and you have to know yourself that you've tried your best. And if you've still failed, it's okay. And you see nice stories coming out, I think quite recently, even in the West African space. A few failures have happened if people have spoken about it. But yeah, I hope early stage founders realize that it's okay to fail. But yeah, I would imagine later on, very difficult. Right now, I mean, for myself personally, Ben, I've been very blessed to be able to put in my own money into my startup. And yes, I feel pressure, but also from myself, right? So I'm as invested as my investors are, and I want to generate them a return, but I also want to generate myself a return. And so how am I managing it? I think I have realistic expectations, to be honest with you. So when I speak to investors today, I'm talking about the next stage, like all I've got to do to get to the next stage. And, for example, for Salus to reach its Series A, I know I've got to sign up X amount of customers before this date. And I break it up, how many per month, what's my retention going to look like? And I'm going to start mapping it out on my journey. And I'll just manage it like that. But I'm not expecting to own the whole market, and I'm not expecting to provide these investors a 10x in 3 years. They know what the potential return looks like. I've told them.
Yeah. Okay. Cool. Cynthia, you have a question. You can.
Yeah, I do. So first off, Andrew, thanks so much for sharing on some of the things, and these are very, very, very valid points. I want us to talk about like some realistic situations. So in your case, right, you're really good. You have a very strong engineering background, which means you can probably code, right, and build stuff, right? So for founders who don't have, that skill, and right now that particular skill is very high priced, for you to be able to hire someone to be able to build out a huge part. And Benjamin talked about, specific startups that are heavy on technology, like the SaaS and co, right? So most of the founders will be like, I need funding to be able to sponsor that part of the conversation, right? So how do they navigate that in a case where no user, no revenue, nothing whatsoever, and they have to get something going, and they probably haven't found like a co-founder that is willing to like sweat it out with them, right? And that kind of situation.
Sorry, before you answer, I think another way to ask that question, is like, is bootstrapping only for technical founders? Like, is bootstrapping only for people that can use their sweat equity to get things going and stuff? But yeah, you can combine both questions and let's see.
No, I don't think so. I think, look, let's be honest, both, everybody needs to sacrifice in the beginning, right? Technical or not. Even when I started Deimos, I didn't pay myself a salary and I sweated it out, even though I was coding, I was consulting, I was architecting solutions for corporates or whatever. And I, even though I was collecting money from month one, or actually not, invoicing on month one, 30 days later, collecting in month two, I only started paying myself at month 6 or something like that. So is it only for technical founders? Look, I think it'll be great to talk about what's coming, because I honestly believe aspects of intellectualism or knowledge, or what's the right word? But AI is basically making a lot of it obsolete, and it's going to be very interesting to see what happens. But I've got no idea. But that story that Cynthia mentioned now is coming to an end. You don't need to be super technical to build products anymore. I think it'll become a bit of an art form, but let's imagine without the AI side. Bootstrapping forces you to do the right things early on, like iterate, try something new. And if you're building a product, I get it. Yes, you're going to have to sweat, and it's probably best to team up with someone. And in fact, there's a reason why Y Combinator doesn't invest in solo founders. They're basically wanting you to have a team, at least 2 people. If you look at Y Combinator, they typically don't invest in solo founders for a reason, and it's around support and network and sharing the load, right? So I think it's not possible to be. It's not that it's not possible, but today, Cynthia and Ben, you would need to be a technical founder to be able to build a product in a bootstrap way, just like John Rush does, just like Peter Levels, just like, I don't know, there's a few of them, and they're trying stuff and they're iterating. John Liu, they're releasing products and trying, and you can check what Peter Levels did, but there's a whole thing around indie hacking, and it's not something that I'm an expert on, but there's definitely a whole community of indie hackers, and I think that AI is changing that game, Cynthia. I'm more interested in the mentality of, even if you have a large venture, you still need to manage your costs very well. And just because I can pay, like I've raised millions of dollars now, and my team is expecting to get paid in the same way as they get paid in the service business, I told them absolutely not. You're going to sweat out for this. You want this equity? Like there's a employee stock option plan that I've put aside, and there's 1 million shares in the ESOP. And I'm saying to the first people, no problem, you can have some shares and you can vest them and you can work, and there'll be a cliff date and you can vest, but you're not going to be paid in the same way as you were a consultant on something. You're sweating out for equity. And why? Why am I doing that? Just because I have the money doesn't mean I must pay. I need to stretch the runway as far as possible. And like I said, bootstrapping, it's rather the mindset. So just because you've raised money doesn't mean you can apply a bootstrapper's mindset where there's serious financial prudence, focus on cash flow. Even right now, I'm speaking to engineers on Salus who are expecting to focus on building beautiful things, software-related things, right? And my response to them is, no, you have to get customers first. Right. And so we're fighting. The engineers want to architect these beautiful systems. And I'm saying, you get me another 3 customers and I'll let you do that for 6 months. Right. But the focus is on customer growth and financial prudence. And just because you're taking a big bet doesn't mean you must spend all of your money at the same time. I think, we haven't spoken about, I don't know, I just hope at some point you ask me about what are the benefits of raising. I can talk about it, but I just feel like
we've been touching a bit on some of the benefits and challenges. But we can ask it as a main question, right? Because we said one of the benefits of bootstrapping is the control. Benefits of venture capital is the fact that you have access to capital, and then the challenge on the venture capital side is that high pressure for returns. But if there are other things you want to add on benefits and challenges of both sides, please go ahead.
Yeah, so I mentioned we can come back to the order in a minute, but a number of aspects that I didn't realize that I was going to get out of this experience. I mean, I feel like a fool because it's obvious in hindsight, but as a bootstrapper, it's funny, like even now, as you mention it, that 90% of startups are actually bootstrapped because A, they can't raise the money, or B, they're forced to, and then they try and, whatever it is, it's not newsworthy. And the thing is, when you're raising money and speaking to investors, you end up speaking to very high caliber people. So the one thing that I didn't realize is I've been building and bootstrapping, not in the dark, but I've been like, it's okay, I'm just going to keep going and I'll just do this myself, right? And raising money from investors, I've met a lot of people. They challenged me a lot, obviously. For African startups, I mean, I'm a white guy on my way to San Francisco, and I'm a second-time founder, and I got a strong reputation and a network. And it definitely wasn't easy. It's still not easy for me to do that. I can imagine for underrepresented people, like I didn't get laughed out of rooms, Ben, but I did. I ate a lot of humble pie in this process, and but the unexpected things was, the challenges that I received on the other side. Investors saying, no, this is not going to work, and this is why. It gave me a lot of feedback, and I was able to refine my approach, my go-to-market, the actual product itself, like change aspects of what I was about to do just by speaking to high-caliber people that have also introduced me to customers. Yeah, just like silly stuff, like I'm currently, I won't say what, but I'm about to receive hundreds of thousands of dollars in credit to build stuff in the cloud, right? But one of the prerequisites was, are you venture backed? And it hurt me, right? Because the crazy thing is I've been paying for all of this stuff as a bootstrapper. And why don't bootstrap? These are the ones that we both need support, both bootstrappers and VC funded startups. They both need support. Why is the one favored over the other? I don't know.
And I think just even on that point, I've seen some applications for things like, is it alien visas, global talent, etc. And they say stuff like, oh, have you raised up to maybe 500K in funding before like they consider you worthy. So I think that's also probably biasing a lot of people's minds in terms of where to go, whether to be bootstrapped or to raise money. So yeah, that's actually an interesting point. Also, the fact that you mentioned you meet more people that will challenge your thinking, and just make that the way you're thinking about this thing is either less ambitious or they introduce you to customers and give you free stuff. I have two questions in mind, and I really want to get more questions from people. So if you have questions, just put up your hand, and we'll go from there. So if you look at a founder, right? Founder A has built a company, probably left that company, and is about to build another company. But this time around, the company is going to be venture backed, right? But then there's founder B, and founder B is probably like your own archetype or Tosin's archetype, right? Which is they've built a company, but as an offshoot or as, offshoot, like the next thing they're building is still in the line of what they had built before, right? If you were an investor, would you rate both of them the same way? Let me try and paint a more vivid picture for you. So let's say I'm Benjamin. I built a media company. I bootstrapped it. Now I'm about to go and build a fintech, but I want to do VC route. And then there is somebody else, Cynthia, right? Cynthia has built Deimos. Don't shoot her. But yeah, Cynthia has built Deimos and is about to build Salus, right? Venture back. As an investor, what are you thinking about? How are you rating and classifying both? Because I think there'll be people like that who have been in an industry for a while. They've learned this financial prudence you're talking about. They know how to be scrappy. They know how to do this, but then they're going into another area that they probably also have that same level of insight, but because it's not a natural follow through, people might think of them less or whatever. So, but what do you think about that scenario?
Sure. Not as much as I think the difference between a first-time founder and a second-time founder. I think there's a vast difference in that. I think a lot of first-time, even me when I started, I just like I told you, I didn't do this intentionally, but I highly recommend the route that I've taken. Even the bootstrap first, then venture second. I highly recommend it. I think it's I don't know if it's easier. I think a lot of venture fails. I mean, I think, what is the figure? 90% of ventures fail. I don't know. And I just feel like I'm going to have a better time doing a venture project now than I would have if I was just doing it for the first time. I've learned a lot about a lot of things that are going to help me. I think that it's obviously being in an industry that you know very well is key, but people do different things, Ben. It really depends. If you've got a team around you that, for example, you're in media and let's say you start a fintech, well, I think your co-founder should have deep experience in fintech. I think that's key. Just coming back to the like a lot of, I think that not every business is venture backable. And for example, I didn't raise money at Deimos because I knew that it's not considered cool or sexy or in a big market. It scales with people. Like I didn't think about I mean, it's still 6 years old. Nobody's ever bought or sold a single share of Deimos, right? It's not that kind of business. It generates free cash flow. Yes, people could buy into it, but it's never been a mentality. And yeah, I think what's different, Ben, is how are you going to do things at your venture-backed business? Because it's not the same culture as, a fintech VC-backed business is not the same as a bootstrap media business. And it's the same for me, even though it's in the same domain. Like, I love developer and security operations. I do a lot of services around that, and now I'm building a product in that same area. So I would say I'm a domain expert. But the thing is, yeah, I know Tosin did that. I know I'm trying to do something like that. But it's generally discouraged. Hey, did you know that? It's generally discouraged. You can read about it. It's one of the first books I read when I started Deimos, and it's a deep encouragement to not build. If you've got a services company, don't start a product company. And I think it's called Founder to Founder or something like that. I'll find it. But even 37 Signals will tell you the same thing. Hey, so the general consensus is if you've got a professional services business, whether it's paid for media or paid for developers or whatever as a service, the general consensus is the cultures are so different that you shouldn't attempt it. You can't just easily transition. So I would say that is probably the most key is there someone in your new startup who is a domain expert, and what are you going to do things differently?
Okay.
Because you can't just do the same thing. Yeah.
Yeah. Okay. So I think my takeout from there is, the difference between both type of founders is quite minimal compared to a first-time versus a second-time founder in general. And then, you need to show that, you can do things differently, or like either from your team makeup or from your mindset and approach and everything like that. And then my final question, if nobody has any question, my final question is, we talked about control and how, like, in a venture backed business, as the longer you go, the more rounds you raise, the more diluted you are in control. So should founders of venture backed businesses be thinking about being replaced as CEO down the line? Right. This is probably something people don't talk about, but this is something I think many people come to expect. Right. So say, you've built a venture-backed business, yes, I know there's been a lot of arguments in Silicon Valley about, founder CEOs are better, blah, 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 blah. But do you think that realistically, a founder of a venture-backed business today should expect that if the company does well, right, or in the next 5-10 years, they will be replaced as a CEO?
I don't think one should go out with that mentality. Entrepreneurship is not for everyone. Hey, let me be very clear with you. It's not everybody's cut out for it, and not every founder is cut out for being a CEO. It's both of those roles are, I would say it's not really. Yeah, the founder is generally the founder. And it's quite hard to transition into the CEO. And yeah, sometimes you get lucky that Silicon Valley mindset, what are they calling it? God mode or founder mode, or at the moment there's a big Twitter debate about it. But yeah, I think you got to know what you're doing. So by the time you've lost control, where a board has the right to outvote you and replace you as a CEO, yeah, you got to be confident. You got to be confident in your abilities, and you've also got to acknowledge that you can be replaced. And I think nobody should go out with the, hey, I'm going to make sure I'm going to be replaced or replaceable. But and again, Ben, I'm not a expert fundraiser. I would say I've had an easier time raising funds, but it was because of other things. I'm not experienced in it. It wasn't because I'm very good at it. So I definitely haven't raised a lot of money, like big Series C's or something like that. yeah, sorry, I've even lost my way. But
yeah, I get what you mean. People shouldn't come into it with that mindset that, oh, I'm going to be replaced, but then they can
it can happen. So you need to prepare for it. Yeah, it can happen. And I think it is good to work your way out of it, especially, that's what I was saying, is I understand your early investors, the ones with board seats, initial board seats and voting rights, etc., that their incentives become very aligned with the founder CEO's incentives as you go up. So they become generally speaking, they're like, I win, you win type of thing. So we together, right? So our incentives are very much tied to each other. So it's not that common. You really need to be a bad CEO to be replaced. And in that case, it's probably for the best, right?
Yeah.
You know, like there'll be a reason that there's a board meeting where they vote you out as CEO, probably because you're underperforming or there was misconduct or negligence. And just because you started something doesn't mean you are a professional manager, because a CEO is a tough job. It's a very lonely job, and you need to be humble and receive feedback from people. You're in the hot seat. It's not lovely.
All right, thank you so much. I think Miracle would ask the final question, and yeah, we'll call it a day. Miracle.
All right. Thank you guys for the info that I'm getting. I'm taking a lot of notes. But I just have one question. So there's this, will I call it a sentiment that a lot of people have, that you need to have a huge amount of money before you bootstrap, right? So is this a thing? Is it that you have to have some huge amount of liquid cash in the bank or something before you're able to bootstrap a company? Or if not, how do you manage, cash flow if you're bootstrapping a company? So that's just basically what I want to ask.
Yeah, I don't have the greatest answer for you. I bootstrapped a company with no money, and I don't know what would have happened, Miracle, if it wasn't a success. So I don't encourage people to do that. But just answering your question, I had zero money when I started Deimos and I started bootstrapping. But I chose a field where it's very simple. If you think about a professional service, you do a piece of work, you send an invoice, you collect the money, you spend less than you collected. It's that simple, right? So,
Okay.
That's not a venture backable business. You can get to significant scale. You got to put systems in place, but you can grow to the size of Deloitte's if you want. If you want to become Accenture, where they've got 200,000 people doing audits, financial audits, it's possible to do that. But that's generally to start out in a services business. It's not a venture backable one. So choose a field. So no, you don't need a lot of money to start a service business. But if you're going to bootstrap a product, then yes, you would have to have something in the bank. Most of the advice of everyone on the world is start a side hustle. You can only transition at the point where it can sustain you. So I would say, yes, you need money to bootstrap a product business because it's very hard. A lot of products don't get customers or don't find any form of product market fit. And that failure can take 12 months, 24 months, and you got to eat in between that time. And if you've got zero customers for 24 months, you better have some money in the bank.
Yeah. Oh, thank you very much for that. I really have got to know the info that I
Thank
need.
you so much, Andrew. Do you have any final words? Anything you had prepared that I didn't ask you on? Yeah.
No, I just think, it's just a funny thing, right? I think the main difference is to get to venture scale, like $100 million in annual revenue, you probably need venture capital to get there. In a few cases, it's possible to reach their bootstrapping, but it's unlikely. It's unlikely. The final thing is that irrespective, the way that you get there will be different, but you're going to get to the same outcome, which is reading balance sheets, making a profit, managing your debtors, forecasting, budgeting, all the financial prudence that's required to run a tight operation and make a margin. You all end up in the same direction. It just means Bootstrapping, you're forced to do it much faster and much more slower, more sustainable. It's much of a muchness. I think the stress is hard on both sides.
All right, thank you so much, Andrew. If anybody wants to say thank you, please unmute your mic, say thank you. And this brings us to the end of the session today. We will share a recap. We're also trying to put together the recording, and just watch out on our social media and it will be there. I'm also going to share a link to an article on like bootstrapping to venture capital. The use case was team mapped to money points, and I hope some of you find it useful. Thank you once again, Andrew. Thank you, Cynthia, Miracle, and everybody else that listened and joined. Have a nice day. Bye.
Bye-bye.
Yeah.